Broadcast is now starting. All attendees are in listen-only mode.
Well, good morning, and thank you for attending our webinar this morning. Today, we have Jonathan Sachs from American National Pensions with us. He will be talking about the business solutions, working with small business pensions. And in a little bit here, I'm going to turn over the presentation to Jonathan to talk more about this. And I'm really glad you're here today. Again, this is Jim Guynan. I'm with Insurance Agency Marketing. I'm one of the annuity directors here. And I do want to remind you that our presentation is being recorded today. So for some reason you have to leave early, or you just like to tune in on this a little later on. If you want to hear something again, we will make the webinar available to you shortly thereafter being over. So again, thanks for your time today. I know that you have a lot to do, so we'll get right to it. I'm going to have a few intro slides here that will talk about what's happening at Insurance Agency Marketing, some updates on our next academy. And then, like I said, we'll turn this over for Jonathan to go more in depth about what's going on with the pension program at American National. So first of all, I want to talk to you about some business builders. We have several of them. The referred producer program we've worked with for a number of years and has continued to grow. This is our way of saying thank you for referring agents to us here at our brokerage, whether they're Medicare agents, whether they're those that are writing life insurance or annuity. As you can see, once that referral contracts will send you a check, and then from there on an override, and this is unlimited, so it's not limited to one or two individuals or so many per year. If you have a number of agents you'd like to refer to us, we'll be glad to follow up with them and work with them just as we do for you. So our way of saying thank you, and also compensating you for doing so. Our marketing reimbursement program is an ongoing program also that creates a pool of dollars for you to use to help defray expenses in your business. And so whether it's target life, single premium life, or indexed annuity business, we throw dollars every time you issue a case. We throw dollars into that marketing reimbursement account, and then from there on, as you have business expenses, maybe a lead drop, maybe a seminar, or just an expense in your office, you submit the receipt, and then we will turn around and reimburse you 50% of that. And then our other business builder, of course, is the new producer bonus, which I think is the most immediate, of course, which is, as you can see, the different levels here. In your first 180 days of writing business with us at IMES, you can see the different thresholds. When you hit each one of those at the end of that period, this is what you can look to be receiving from us. And of course, there is also cash at the $500,000 level. They just don't have it on this list. But again, our thanks to you for placing business right away with us, and we're going to turn around and again return the favor to you. So hopefully many of you, if you've not already, will take advantage of this in the months to come. Our back office support here at Insurance Agency Marketing, I think, is very good. Having worked at 2 IMOs, I will tell you that we do, I think, a really good job of the things that save you time. So you're in the field, you're writing the business, you're out prospecting, seeing individuals, writing cases. You don't have time to run all the illustrations that are needed to be ran. You don't have time to follow up on the cases once they're written and in-house and to find out what requirements may be needed. And so that's our job. Really, that's a minimum requirement of an IMO. But as you can see, case design, which is what we do as directors, also help you with your illustrations and quotes, life or annuity, and the paperless contracting. Again, this morning, I had an individual that called in, and he needed, he changed gears on a case, wanted to go with a different carrier. He already was appointed. he didn't have to fill anything out. He's already done the paperless contracting. We just added the carrier to his list. One less thing he has to do and doesn't have to fill out. So again, those are all to streamline your business and help you in what you do. Okay, our creative department is a area that's really grown here, a department that's really grown at our brokerage. And when I talk to Jacob and the team, they tell me they're busy with website design. I hear this every day, helping agents either develop a website or improving one that they've already had. So building, improving, email marketing. There's lots of things that they're doing to help agents connect up with what they have now. So building a brand that's has continuity, talking about prospecting, building a pre-approach letter or making a pre-approach letter, all sorts of things that help in your business. So if you have any of those needs, contact Jacob and their department, and they will help you and give you an idea what kind of cost is involved with that. Our website is very usable, let's say. It's imsinc.com. That's www.imsinc.com. I use this website almost every day. I use it for income rider quotes, for comparisons, for searches on products, because we work with agents in many states, and some states are tough on certain design products or features. So this really helps us, and it can help you too. So if you've not been to our website, go out, create a login. You can find things like term quotes. You can find our webinar schedule out there, for example. Our current annuity news rate grid is what I'm trying to say. Our annuity rate book that we have at our desk that gets updated and refreshed is out there too. So it's about 45 pages of product, best indexed annuities for each carrier. It also contains multi-year rate and information on income riders. Again, there's a full resource library, as it says at the bottom of the screen. You want to take advantage of that. There's a lot of really good agent information available on that resource library. Okay, and I want to talk a little bit about IMS Wealth. We have been working now with the RIA business for about 3 years now, close to 3 years now, and has grown incredibly in that period of time. Originally, the idea was to offer this as a solution for the DOL, but as time went on, a decision was made that whether the DOL went into place or not, we would continue to grow this business. So if you're interested in what it takes to get a Series 65 and work for a RIA, what costs are involved, what is the potential income, what are the requirements of being under an RIA, give us a call, talk with Charles and his team. If you'd like to get more information on this, I would be glad to. I'm just going to launch a poll question here, and you can answer yes or no if you'd like more information, if you'd like something email or just have a conversation. Again, this has been an area of growth, and not surprisingly, there's a lot of individuals in our business that are getting older. Our agents are getting older, but they're seeing people that are younger too. And those younger people may not necessarily be interested in a fixed annuity. They may need life insurance, but as far as investments, they may have money in the market now, but they're not being serviced well. They're not in the right investment. And I think it really allows an individual to reach out to a whole spectrum of clients that you could not as an insurance only professional. So if you'd like to know more about this, please answer yes or no, either one, that's fine. And I do appreciate your response to that question. Okay, I mentioned in the beginning that we do have some updated information on our Life and Annuity Academy. Our next academy is scheduled for September. I believe it's September 18th. I might be off on the day, but we are currently, right as we speak today, working in our and having our second producer training of the year as we speak. So the next one scheduled, as we know, is September. If you're writing fixed annuities or life insurance and would like to know more about ways to grow that business, this could be a good training for you. It's all expense paid. It's a 2-day training. It's a come in on Wednesday afternoon at the site, evening of Wednesday, all day Thursday, half day Friday in your home. So we cover a lot of information, as you can see on the screen. Those are just some of the topics. It's updated every time. And of course, we sometimes co-opt that with a carrier. Sometimes we have it in our home office here in Omaha. So if you're a producer, would like to grow that, please consider our academy. We'll be glad to review your registration, visit with you about what kind of business you're writing now, and find out if it's something that you'd like to know more about. So if you do, I can send out a questionnaire here. Please respond to that, and we would be glad to get you some information. There will be an email that will go out afterwards with more about the academy, how you can register for it. Again, I believe there was an email that already went out for the September date, so I apologize I didn't commit that to memory, but I want to say September 18th. I don't know if that's a Wednesday or if that's the Friday, but it's about that time of the month. So anyhow, we'd be glad to visit with you further. You can certainly call me if you'd like to know about the academy. If you've been to an academy before, that's fine. We would ask that it's been at least 2 years or longer since you would come back to an academy. I do want to add that also. So we do have agents that will come back for refresher. Our program doesn't change that much in a year's time, but it is updated. We also give you an opportunity to talk with a couple top producers that work with seminar selling. We also have someone there from our IAMS Wealth Management. So we try to incorporate a lot of things in this basically 2-day, 2.5-day training. Okay, moving on and wrapping up is our marketing summit. Wanted to just promote that a little bit. This is wrapping up here at June 30th. The qualification period. This is our educational and social event, and this will be held in August in Naples, Florida. This is our 2019 Marketing Summit. If you're, by the way, if you're in this, you're writing with us now already. We will be updating the qualifications for it. We have not yet determined where the next program will be. That I'm sure will come and an announcement of some kind in July. But again, this is our opportunity to provide an education and also have a social event with our top producers. And so again, a great way to work closer with our producers. Okay, so from here I want to turn the presentation over to Jonathan. Try to keep this short, so I want to give this to Jonathan to present his topic of this morning. Okay, so Jonathan, can you are you ready there? There you go.
I am. Thank you. How's my screen look?
It looks great. Looks great.
Okay, perfect. Always want to make sure technology is working the way it's supposed to, right?
That's right. That's right.
All right, well, Jim, thank you very much for having me today, and thank you, IAMS, for allowing me to present today to your agents. My name's Jonathan Sachs. I am with American National. Our headquarters is in Galveston, Texas, so you're currently talking to a Texan, and we're on the coast. We've been around for over 100 years, but my specialty is retirement plans. I am one of the plan consultants in qualified plans. That's what we're going to be discussing today. If there's time at the end, by all means, put some questions in the question box, and Jim will facilitate those. If we don't get to them all before we run out of time, I'm happy to address them on a case-by-case basis. Please use me as a resource. Ask me questions, maybe a potential client that you want to talk about. Anything at all, don't hesitate to get a hold of either Jim, Imes, or myself here at American National. So, retirement plans. Why should we do them? When's a good time to do them? What's this all about? And to be honest with you, now is an excellent time to be talking about retirement plans. Well, why is now a good time to be talking about retirement plans? If you think about it, the government is trying to push retirement savings to the private sector. They are trying to make people understand that Social Security, not even going to talk about whether Social Security will be available, but if you do use Social Security in your retirement, it's supposed to supplement retirement. It's not supposed to be your retirement. It's only supposed to be there to help. You should have other things in the pot, so to speak, to help you facilitate and have a happy retirement. Because let's face it, it's not at what age you retire anymore. It's at what income. Because if you don't have the income to retire, guess what? You're not going to retire. You're going to have to, or maybe be forced to, stay in the workforce. It's an underserviced market. At American National, we actually specialize in plans with 25 lives or less. We will do larger plans. We actually go up to about 100 lives. That's our cutoff. But again, any plan that comes through, please, I'm happy to take a look at it and help you with it. We will give our best shot to every single plan that we are introduced to. Our niche market is 25 lives or less. So some people call it the small plan market. Some people call it the micro plan market. It is our niche, and it is woefully underserved. Small businesses make up over 90% of all the businesses in America today. There's over $5 trillion in the small business, in the retirement market. 1 in 4 Americans have access to a retirement plan where they're actually using it. But if you look at a company that has 5 employees or less, it's actually less than 1 in 10. So these small businesses, they just don't have access to retirement plans. You're going to see here in a little bit, we're going to talk about the amount of money you can put into these retirement plans. We're going to talk about the tax deduction that you can get with these retirement plans. And small business owners are always looking for another tax deduction. I've yet to meet a small business owner that thinks he pays his fair share in taxes and doesn't want to pay less. They're always looking for a tax deduction. These plans can offer sometimes the largest single tax deduction they can see out of anything else that they've got going for them. Another thing about American National is we're a turnkey solution. What I mean by that is everything is done here. It's a one-stop shop. We design the plan, we administer the plan, we fund the plan. Everything is done here. Our administration department is 2 floors below me. I'm on the 9th floor, they're on the 7th. And trust me, I'm down there all the time talking with them. So the nice thing is you don't have to try and bundle this together. You don't have to go and find the investment product. You don't have to go and find the third-party administrator, and then you don't have to go and find somebody that's ERISA capable to actually put this darn thing together. It's all done here at American National. One of the great things is every single plan that we get gets a customized solution. And it's very important to make sure you're fitting the right plan with the right client. Let's look at a couple of examples. A lot of small business owners, your sole proprietors and your LLCs especially, and your partnerships, they go to their CPA or their accountant and they're looking for another tax deduction, and that accountant invariably is going to point them into the simple or the SEP IRA because that's all they know. They know about simple and SEP IRAs. They're not very familiar with the qualified retirement plan market, which we're about to delve into. And I kind of equate that to you don't go to a general practitioner for brain surgery. You need a specialist. Let me be your specialist. So here's an example where a client went to their accountant. They put together a SEP IRA. It's not bad. I mean, it really isn't. The owner's getting almost 80% of it. We took the exact same plan, and what we did is we created a new comparability profit sharing plan, and the owner's share now exceeds 90%. So the budget's the same. You're still getting the tax deduction, but now the owner's giving less. Let's take another look at this. Did you know that a 401k plan can beat a SEP plan almost every single time? And as a matter of fact, if the client is age 50 or older, the 401k beats the SEP every single time, 100% of the time. The reason for that is because at age 50, a 401k plan can utilize the catch-up provision. That catch-up provision is not available in a SEP IRA. So if your client is age 50 or older, a 401k plan will beat their SEP IRA every single time. These two examples, one owner making $50,000 of W-2 income, the other making $100,000, both of them age 50. You can see in the SEP for $50,000, they're limited to 25% of their income, which is $12,500. But look what we do on the 401k side. We beat that SEP. We don't beat it by a little bit. We really beat that SEP. And then if you go to the 100,000 range, you'll see again, we're not just beating it by a little bit. We're doubling what you can put into the plan. So the reason why I'm showing this to you is because I don't want you to go in and talk to your client and say, Mrs. Client, we need to talk about your retirement plan. And your client says, you know what? I've got one. I've got a SEP IRA. I don't want you to, say, oh, thank you, appreciate it, bye, and walk out the door. No. Just like when you sell life insurance. Your client already has a life insurance policy. What do? You review that policy. Same thing. If they have a retirement plan, Mrs. Klein, congratulations. You've had the knowledge to set up a plan, whether it's because of the tax deduction, whether it's because of the fact that you need to start saving for retirement or you need another piece of retirement savings. It doesn't matter. Let's review your plan. Maybe when you set it up, you only had 1 or 2 employees and now you've got half a dozen employees. Well, obviously the goals of the business have changed. So shouldn't the goals of the retirement plan change with it? So just because they have a plan, don't walk away. Let's see if we can do something better. These plans offer a tax deduction now, and they offer deferred tax growth. But what about tax-free? Can you get both? Yeah, you can. It's called the Roth 401k plan. I call the Roth 401k plan the great equalizer. The reason is if you're familiar with a Roth IRA, how does a Roth IRA work? Well, a Roth IRA, you put money in, but you don't get a tax deduction. The money grows tax deferred, and as long as the distribution is qualified, meaning at least 5 years old, and the client is at least 59 and a half when they pull the money out, that money comes out tax-free, 100% tax-free. So now you have tax-free qualified retirement dollars. There's 2 big problems with the Roth IRA. Your first problem is if you can contribute to a Roth IRA, your limit is $6,000 and your catch-up's $1,000 for a total of $7,000. The second issue is the government says if your client has the audacity to make too much money, guess what? They don't get a Roth IRA. There's an AGI income restriction. Well, a 401k plan is governed by federal law, not state law. Therefore, you can't discriminate based on income. So now it doesn't matter how much money your client makes. They can make $1 million a year. It doesn't matter. They now have access to Roth contributions, to Roth dollars. Not only that, but the contribution is not $6,000, it's $19,000. The catch-up is not $1,000, it's $6,000. You can actually get $25,000 into Roth 401k. This is just an extrapolation. You'll see there's the employer deposit. That's the profit sharing contribution. So even if you're making a Roth contribution, the company can still make an employer contribution. You have 2 pots of money, one that is taxable, meaning you did get a tax deduction up front, and the other is not. We're talking about tax-free, qualified retirement money. Where else can you give your client tax-free retirement dollars? There's only one other place that I can think of where you can do tax-free retirement dollars. That's an overfunded life policy, typically an IUL. An overfunded IUL. Withdraw to basis and take loans, right? That's what we preach. Nothing wrong with it. Well, there is one problem. Your client has to be insurable, right? The other side of it is you've got the cost of insurance in there, especially if they're rated. But have you ever heard of something called diversification? Don't we always preach not to put all your eggs in one basket? If your client can overfund an IUL, I know one thing. They've got disposable income. Why not do both? I understand you have an IUL. Congratulations. Why would you not add this to your portfolio? Jim talked earlier about wealth management. This is wealth management. Don't put all your eggs in one basket. Here's another opportunity for you to get to qualified tax-free retirement money. And you're still getting a tax deduction every year. This is just one example. So let's say the client says, this is great, I love it, but I really need a large tax deduction. I mean, you know, that's cool, but what else you got? Or I'm 55 going on, or I'm 60 going on, and I need to accelerate my retirement savings because I really don't have any. What do you got? The answer is a defined benefit plan. This is a look at a traditional defined benefit plan. Again, small company. Typically in a small business, the owner is older and the owner makes more money. This particular illustration shows 3 employees, 1 owner. Target contribution for this plan is 116. I'm rounding down, or sorry, yeah, I'm rounding down to 116 here. So the target's 116. Traditional defined benefit plans had a big problem because they required that regular funding, and you saw a lot of them being frozen in the news about 20 years ago and how they were disappearing. That's no longer the case. One of the great things is traditional defined benefit plans now have flexible contributions to an extent. And let's take a look at that. So remember that the contribution level here, the target is 116. And 100% of that's tax deductible. So you're showing a small business owner a tax deduction. I mean, assume a 40% tax bracket. I mean, if you're looking at California, it might be 50 or even 60% tax bracket, right? Where else can they find a tax deduction of this size and still keep 80, 90% of the plan for themselves? All they're doing is take it out of their left pocket and put it in their right pocket for retirement. So that flexible contribution, at the end of the year, the actuaries will crunch the numbers. They'll send out a letter and say, Mrs. Client, it's time to fund your plan. The minimum requirement is 54.5. Remember, target's 116. The maximum deduction you're allowed this year is 146, let's call it. Please fund somewhere within this range. That's not bad. That's like $90,000 of flexibility, right? So the client knew what they were getting into, and we definitely talk to clients about how retirement plans, especially defined benefit plans, work and make sure that they're comfortable with it. Client had a good year and they funded at the maximum. They knew target was 116, but they funded at the maximum. In year 2, actuaries crunch the numbers, out goes the letter. Look at the minimum. Look at the maximum. Is that flexibility? Client had a really good year again, and they decided to do level funding. They just funded the same amount in year 2 that they did in year 3. Sorry, in year 2 that they did in year 1. Look at year 3. Now, if your client has a bad year, I would never recommend that they skip a year of funding. I would implore them to do something, put in 10, 20, 30, put something into the plan. Ultimately, what happens here is this plan has a surplus account in it. And as the surplus builds, the minimum goes down. But if you were to skip funding year 3 and use all of that surplus, in year 4, your minimum would shoot back up into the $60,000, $70,000 range. Not a good day. So 2 takeaways here. 1, put something in there to help maintain that surplus account. 2, when we're talking to a client about a defined benefit plan, we make sure they understand that they are obligated to put money in these plans every year on an ongoing basis. So we show this to the client. The client really likes it, but they're like, you know what, Jonathan, this is really great, but can you do more? I love it when they ask me if I can do more, because yeah, we can do more. Let's show them what is called a 412(e)(3) plan, or a fully insured defined benefit plan. The difference between a 412 and a traditional defined benefit plan, the big difference is 1, the 412 is invested in fixed products. So the annuity is a fixed annuity. The life insurance is whole life insurance, both guaranteed products. So that everything going in is guaranteed. I can guarantee the outcome because I know everything inside of it is guaranteed. But if I'm going to guarantee the back end, guess what you have to do? You have to guarantee the front end, which means that this plan is not flexible. That annual contribution is required. You have to meet it every year. The other thing is there's no market exposure. So now the client can sleep well at night. If you have a risk-averse client, there's nothing better. They can put their money in every year and not worry about it. They can sleep well at night. Don't have to worry about it. Take a look at this. It's an owner and 1 employee. I would even encourage maybe put your spouse on the payroll. But look at the contribution here. The contribution is $200,000. Assuming a 50% tax bracket, just because that's easy math, that's a $100,000 tax deduction to the client. That client's going to become your best friend. Look at the owner's share. The tax deduction alone covers the employee's contribution. Not only that, but these are like golden handcuffs. We're in a very tight job market right now. You need every competitive advantage available, whether it's a 401k plan or a defined benefit plan. If you're offering these benefits and your competitors are not, guess who's going to get that new employee? Or guess who's going to be able to recruit that salesman or that key employee that you're after? These are the types of advantages that they'll need. So what you saw was a plan that was funded with life insurance and annuity, a combination of both. See it right there? Let's take a look at this and take a breakdown. What a lot of people think is, okay, well, if I'm going to put life insurance inside of my defined benefit plan, all I do is add the premium to the plan, right? No. This is the exact same plan. The benefit on the back end is the same. If we funded it strictly with an annuity, the contribution would be $180,000. Again, I'm rounding. If we took the same plan but added a $2 million life insurance policy, the premium is $50,000. See the difference in plan cost? Mrs. Client, how would you like $2 million of life coverage and let the plan pay for it? Not only that, but it's a $50,000 life premium that's really only costing you about $6,000 a year. Now, let's talk about this for a minute. Who's buying the life insurance? The plan is. So the person is not even paying for the life premium the plan is. I understand if you're talking about a sole proprietor or a partnership, they're wearing both hats. But that's fine. They're getting the deduction. Not only that, but you're buying life insurance with pre-tax dollars. Life insurance is on sale. Have you ever seen a for sale sign at a life insurance company before? You're buying life insurance with pre-tax dollars. Again, assume a 40 or 50% tax bracket. You're buying life insurance for pennies on the dollar. We've had a client, true case, out in California. She was rated table 14. She looked at the premium. She's like, no, no, I'm not paying that. But we gave her table 14. Other carriers were giving her about the same, and some carriers were just flat out denying the coverage. We said, okay, look, you're a small business owner. Why don't we just open a defined benefit plan? You can deduct the premium. Can I do that? Yeah, you can do that. All right, so I'm taking a tax deduction for the life premium. How is the death benefit still tax-free? So the government came out with an economic benefit test. It used to be called the PS58 cost. Basically, what the government says is you have to pay taxes on life insurance in order for it to maintain its tax-free status, death benefit. Well, what we do is we charge you, we 1099 the client for 1 year of term. You know and I know that 1 year of term versus 1 year of whole life premium are night and day. So yes, your client will receive a 1099 for a couple of $1,000s. It depends how big the life premium is and how big the life policy is inside the plan. Life insurance is on sale inside defined benefit plans. We actually created a brand new product for our qualified plan. It is a limited pay whole life policy. It is a 10 pay or to age 65, whichever is longer. It's a wonderful product. It is designed specifically for our qualified plans. It is not even available on the retail side. It is only available for qualified plans. So we've looked at a lot of different things that retirement plans can do. But really, the thing that I want you to take from this is use me as your resource. I want to make this as simple as possible for you. What I want you to do is get a census and give it to me. I don't want you to go and talk to your client about, oh, Mrs. Client, you need a defined benefit plan. Or, oh, Mrs. Client, you need a 412 plan or a 401k plan. Don't pigeonhole yourself. When you're talking to your clients, let's talk about your retirement. Oh, I didn't know you did retirement plans. If your client doesn't know that you do retirement plans, whose fault is that? It's not theirs. You have a book of business already. You're always looking for a reason to go back and talk to your clients so that when they do have a need in the future, they think of you. Isn't this a great opportunity to go back and talk to your clients? You know, Jonathan, we've done business in the past, and thank you very much, but we've yet to talk about your retirement plan. This is a great opportunity for you to go and talk to your current book of business, to touch them again. We have a saying here. You need to make it a habit to mention pension. You should be talking about retirement plans to everybody, because who doesn't need to save for retirement? How many baby boomers are still working because they can't afford to retire? How many baby boomers are transitioning to retirement? You know, that's another thing. Oh, well, I know my client works a 9-to-5 job, so they have a 401k where they work. I can't help them. you need to talk to everybody. What happens if that person has an Etsy account or sells stuff on Amazon or does something online or does something on the side? Most people, or a lot of people should I say, have moonlighting jobs, second jobs, third jobs, where they're a sole proprietor. And sole proprietors are always killed by taxes. They're always looking for a tax deduction. Here at American National, we actually have an agent challenge. If you're contracted with American National and you set up your own plan, we will waive your setup fee. Your setup fee will be $600 normally. If you have 3 plans with us, so your plan and 2 additional plans, we'll waive your annual fee. So now you have a free plan. Compliance hates that word, by the way. You will have a free retirement plan with American National. No administration fees whatsoever. Of course, the annuity inside the product has its own fees, but I'm talking about the administration fees. There would be no administration fees whatsoever. You'll have a free plan here at American National. So I don't know if y'all remember filling out your first life policy, but how much fun was that, right? Calling the back office consistently going, okay, which box do I check? What do I put in this blank, right? Then you sold a couple of life policies, got really easy. And then actually you bought your first life insurance policy for yourself. Then when you were talking to clients, you're like, Mrs. Client, I believe in this product so much, I have one for myself, right? I put my money where my mouth is. I challenge each and every one of you to set up your own retirement plan. I'll help you with the paperwork. This way you can go through the process, see how it's done. So the next time you are talking to a client, you can say, Mrs. Client, I believe in this product so much, I have one for myself. Why would you not set up your own retirement plan? Maybe you don't need to save for retirement. Maybe you don't need the tax deduction. Oh, wait. Maybe you just don't want the commission. I challenge you all to set up your own retirement plan. What we need is our proposal request form completed. This is what it looks like. It's available in paper. It's available in PDF. You can actually go to our website and fill it out and just hit submit. The first page, we need information about the client. And then, if you want, there's a couple of questions on a scale of 1 to 5. What's important? What are you trying to do here? Now, the very last part says what type of plan you're looking at. I would just check the bottom right box. It says, check here if you're unsure, and we will do the rest. If we're doing an existing plan, a takeover plan, we're going to need a lot more information, and we'll help you gather it. Lastly, we need a census. When you get this census, you better make a copy for yourself. Because now you have a cross-selling opportunity. Mrs. Klein, I'm currently doing your company's 401k plan, and I'm offering a free consultation to take a look at your finances and how we can help you out as well. This is an opportunity for you to talk to everybody. You know how old they are. You know what their income is. Free prospecting, right? Some clients are a little shy to submit this kind of information, and I always tell them about my doctor analogy. You know, you walk into a doctor's office, you're like, man, doc, I am just not feeling well. You've got to heal me. I need something. That doctor's going to cross the room and try and examine you. Well, you can't just say, oh, wait, stop. Don't touch me. I said, fix me. I need a pill. I need something. Make me better. Well, that doctor's going to tell you that they have to examine you first. They have to know what's wrong. They can't just come up with a magic pill and fix you. That's why we need a proposal request and census form. We have great marketing material. It's on our website. Everything's available on our website. A slide that I don't have in this particular presentation is if you're using our 401k plan, our 401k plan utilizes for its investment vehicle a group variable annuity product. Now, before everyone hangs up, it is a non-registered variable annuity. What I mean by that is you don't have to have a securities license. All you need is your life license to offer this variable annuity product that has 52 investment choices inside of it. Everything from the S&P 500 to target date funds, allocation-based funds. It's a little bit of everything for everybody. There's a global real estate fund, there's biotech funds. Again, a little bit of everything for everybody. Your exceptions are Connecticut and Massachusetts. Those two states say, I don't care what the law says, you have to be securities licensed. And the product is just flat out not available in the state of New York. So now your client is faced with 52 investment choices. The next thing they're going to do is they're going to come knock on your door and say, I don't know where to put my money. If you are not securities licensed, you should not answer that question. Do not answer that question. But we have a solution. We don't want to leave the client in the dark. We've teamed with Morningstar. When they log into their account, there's an education tab. They go into the education tab. There's a Morningstar. It's a risk assessment questionnaire. Obviously, the more honest they are and the more information they provide, the better the result. Once they're finished with the risk assessment questionnaire, it goes through an algorithm. They don't get to talk to somebody. It actually just goes through an algorithm. And it spits out a recommended investment portfolio based on those 52 investment choices. And they just click here to apply, and all of a sudden, all of their money falls into that category, those categories, and they just received professional investment advice from a very large company. Everyone's allowed to do that once for free. There is no charge for this service to the client, to the participant, to the business. It's free. If one of the participants says, okay, this is great and dandy, but I actually want Morningstar to manage my money on an ongoing basis because there's market fluctuation. You know, my risks might change. The market's definitely going to change. That's fine. Any participant that wants to utilize Morningstar on an ongoing basis, Morningstar will charge 50 basis points or 0.5% to actively manage their money. They will sign on as a fiduciary at that point and manage those dollars. I don't know if any of you are familiar with assets under management, but 50 basis points is a bargain. So again, there's no charge to the client, there's no charge to the plan, there's no charge to the business. Only the individuals that are going to utilize this service. Here's our website. Again, everything's on our website. Our proposed request and census forms available in PDF if you need to email it to a client. I recommend you always keep one with you. Marketing material, upcoming webinars, pre-recorded ones as well. Everything is available on our website. This is our team. Between the four of us, we've got over 100 years experience in retirement plans. Happy to answer any of your questions. If for some reason we can't, we will find the answer for you. But use us as a resource. Whether you have a question about a retirement plan, whether you have a client in mind and you just want to ask a question or shoot an idea, or if there's a takeover plan, anything and everything, do not hesitate to give us a call. Once you get the proposal from us, we'll even set up a conference call and I'll sell the plan for you. I work on salary, I don't work on commission. My name does not go on that application. They are your client, but I will sell that plan for you. Use us as a resource. Please do not hesitate to pick up the phone, call Imes, call Jim, or call us. I wanted to leave a little bit of time in case there are any questions. Jim, I can't see questions on my side. Do you see any questions?
Yes, we do. We do have questions, and thank you very much.
My pleasure.
I have someone wanted to know if an individual owns multiple businesses and has a holding company. So can someone take advantage of this if they own multiple businesses and has a holding company? That was the way the question was worded. So
that's a really good question. So the answer is yes, but ultimately what happens is there are rules and regulations about setting up plans. For example, your McDonald's and your Walmarts of the world cannot go and set up a management company, set up a retirement plan for that management company, and then not set anything up for its hourly workers. That is called a control group. So yes, you can set up the plan, but the plan would have to cover all companies that you control. You have to control them by 80% or more, or they have to be what's called an affiliated service group. That's a little different, a little beyond the scope of this. My point is, bring us a proposal request and census. We will we'll dive deep into it and determine if they are, or help determine if they are a control group, an affiliated service group, which companies have to be covered by the plan, which companies would not be covered by the plan. Great question.
Mm-hmm. All right. Another question is there something like this with employee discretion?
I'm sorry, I don't understand the question.
Yeah, and I'm just reading it. It says, is there something like this with employee discretion? I'm not sure what discretion would mean, so.
I mean, just, I guess, to kind of take a stab at it, can you create a plan only for your employees and not for the owners? Yes. Vice versa. Can you create a plan only for the owners and not the employees? No. There is a minimum coverage requirement. You are obligated to cover 70% of your employees, and it's a ratio, and it's a moving ratio. If you're covering 100% of the highly compensated employees, you have to cover 70% of your regular employees. If you're covering 50% of your highly compensated employees, so let's say, for argument's sake, it's a partnership, 2 people. One partner's in, one partner's out. You're covering 50% of the partners, you only have to cover 35% of the employees. It's a 70 to 1 ratio, but it's variable. So can you exclude employees? Yes, but in a small business market that doesn't work very well. For example, let's say you have 4 employees. You have to cover 70%, which means you have to cover 3 out of 4. So technically you could exclude 1. But the problem is, what happens if one of the employees that you're covering leaves? Regardless of why they leave, whether they retire, whether they go work for somebody else, one of those covered employees leave. Now you're covering 2 out of 3. Well, you just failed coverage and you're in violation of your plan. So there's no cushion there. So it's better to exclude employees with larger plans where if you lose a couple of employees, you don't violate the plan. So maybe that's what the question was asking.
Okay. Another question, is the annuity in the 412E plan, when they retire, is the income counted as qualified income for Social Security purposes?
That's a good question. So yes, I mean, when the 412 plan is, when you retire, you're going to take that money. Typically, you take it as cash and you roll it into an individual IRA, and then at that point, you can do whatever you want. You can put some in an immediate annuity and then some in deferred annuity. You can ladder annuities. You can take some in cash and, of course, pay the taxes on it, and you pay ordinary income tax on it. So the answer is yes. But normally people take cash and then they decide what they're going to do with it, because at that point, interest rates change, products change, all that good fun stuff.
Mm-hmm. Okay. Another question, Jonathan. So, well, the question is kind of general. It says, so it doesn't matter how long an employee has been there. I'm not sure in what context.
Okay, so can you exclude employees based on tenure? The answer is yes. The law says you can up to 1 year. You can always be more generous. So as a matter of fact, I have a plan on my desk where they chose 6 months.
Oh, okay.
The most you can choose is a year. You can say your employee has to be with you for at least a year before they're allowed in the plan. You can also exclude part-time employees sometimes, and the government's definition of part-time is 1,000 hours. So even if you have somebody that's only seasonal, but when they're seasonal, they're working like a dog and they pass 1,000 hours, you have to let them in. The Department of Labor's definition of a part-time employee is 1,000 hours, and that's the definition that you're going to be held to.
Mm-hmm. Okay. A comparison was made between a SEP and a 401k. What about a simple IRA and a 401k?
I hate simple IRAs. I'm a little biased. I mean, the only thing that a simple IRA has got going for it is there's no administration fees. But, the other thing that we didn't get onto about your SEPs and your simples is a SEP and a simple IRA, there is absolutely no oversight. So it is very easy to run afoul of your plan. Maybe you didn't let somebody in time. Maybe you're not making the right contributions, or you're not doing timely deposits. So, a lot of times we run into plans that are just out of compliance, and you just hope to God they never get audited. But the thing about a simple IRA is it's exactly like a safe harbor 401k. The difference is you can only get about 60% into a simple. The simple contribution limits are only about 60% of that of a 401k plan. The other thing is sometimes this is a selling piece, sometimes it's not. In a 401k, you can take a loan and a hardship distribution. You cannot take loans from IRAs.
Mm-hmm.
So typically, I don't like simple IRAs. I mean, if you're going to go through it, you might as well just go all the way and do a 401k where you do have an administrator there looking over the plan, making sure it's done correctly the first time. And then also with the simple IRA is the contribution limit. Actually, one more thing. A simple IRA has a weird rule. That money is not portable for 2 years. You can't roll a simple IRA into a regular IRA, into a 401k. You can't roll it anywhere for its first 2 years. And that's just a weird rule about simple IRAs.
Mm-hmm. Another question, how much does the annuity cost per year?
That's a good question. Okay, so inside of our 401k plan and our traditional defined benefit plan, they both use the same WealthQuest 3 group unallocated variable annuity. I know, it's a tongue twister. The first $500,000, the wrapper is 125. It's 1.25%. 35% of that is M&E. 35 points of that is M&E. 90 points of that is asset fee. So after $500,000, it does drop by 20 basis points to 105. And it's a ladder. So the first $500,000 is always charged 125. The next $500,000 is charged 105. And then after $1 million, it drops to 85. So that's the wrapper on the annuity. That is the asset fee for that product.
Okay. What is the vehicle you use for the defined benefit plan?
So if it's a traditional defined benefit plan, we're using the WealthQuest 3 product and you're allowed to add the limited pay whole life product to it as well. You're allowed to add the life insurance to a defined benefit if you want. On the 412, it is our fixed group annuity, which has no fee. It's a fixed group annuity, and every anniversary the rate changes. But I think right now I think it's at 2.35% is currently what it's paying. It was more, but the interest rates just fluctuated recently, and it's declared every month. I can go online and look at it.
Okay. Another question, can you use these with an S Corp?
Great question. So because of the Pension Protection Act of 2006, actually even EGTRA of 2001, any business entity can have any type of defined benefit or any type of retirement plan. It used to be that they couldn't, and that's why the question is there. But we set up 401k plans for sole proprietors, S corps, nonprofits, hospitals, schools. A lot of 403B market stuff is going away because of the portability and the ubiquitousness of the 401k. So anyone can do a 401k these days.
Mm-hmm. Can the old, I assume this means Social Security, can the old Social Security offset be used to eliminate lower paid personnel?
I've never heard that question before. I don't know. I'll have to look at that, and I can send you an email, Jim. I don't know the answer to that question.
Okay.
I'm not familiar with it, so I'm going to say no, but I need to research it. That's a good question. Thank you.
And question, this will work for any type of entity?
That is correct. I mean, LLCs, sole proprietors, partnerships, nonprofits. I've done it on a township before. So yeah, typically your government agencies go with your 457 plans, but yes.
Okay. Let's see here. Can you fund a 412E with life insurance only, and can any type of entity qualify? Sole owner, C Corp, S Corp, partnership? That's kind of a two-part question there, I guess.
No, that's quite all right. So yes, anyone can have a defined benefit plan. Anyone can have a 412 plan. We set them up for single individual lawyers and doctors, and actually we've set them up for Hollywood types before. They're sole proprietors. Mm-hmm. No, it cannot be funded solely by life insurance. There is something called the incidental rule. The incidental rule is literally the rule that dictates how much life insurance is allowed inside any qualified plan. And the rule says it's different for whole life insurance. Whole life insurance is still held on a pedestal because of the olden days. And then any other type of life insurance falls into category number 2. So basically, you can put twice as much whole life insurance into a qualified plan than you can any other type of life insurance. But you're limited to roughly half. The life insurance cannot be more than roughly half of the plan. It's a rule of thumb. There's a little more to it, but for the sake of this argument, that's a good rule of thumb.
Mm-hmm. Okay. Does the life insurance used for 412E have an option for living benefits like chronic illness?
Great question. Okay, so if you have life insurance, and if you have any type of investment product inside a qualified plan, you are not allowed to pay for a rider. Our life product has all of those built in. There is no fee for those riders, so the answer is yes. It has critical, chronic, and long-term. It has accelerated death benefit for critical, chronic, and terminal illness. Sorry.
Okay. Are there any charges from the mutual fund company in excess of the annuity fee?
No. I mean, the mutual fund has its own expense ratio inside of it, but I mean, that's not a fee that they charge. You don't see that. Mm-hmm. It's just like if you go to any other ETF or mutual fund, whatever return they show you is net of their expense ratio, but every one of them charges an expense ratio. So, I mean, if you want to count that as a fee, then yes, that expense ratio does exist. But do they charge an actual fee? No.
Okay. I think I have one more for you.
Sure.
Are the riders for critical, chronic, and terminal available in California?
Yes. That's why it's popular in California. Matter of fact, all our life products do in the state of California.
Okay. I think that's it. I think that's it for questions. Thank you so much. I want to just extend out to everyone, if you're interested in getting a little more information, I know Jonathan posted the email address and the contact information. If you'd like to get more information on marketing pieces, I can provide that also, or to get contracting for American National, as Jonathan mentioned, it's just the standard life and annuity contract through American National. So there's no special contract. I believe there's a product training though, correct? For this pitch, for the
No,
pitch? Oh, there's not. Okay.
no. The only thing you're going to need is your 4-hour annuity I mean, everybody needs that if you're selling
Right.
annuities.
Right.
Yeah.
Okay. Well, so if you would like to get more information, just answer the poll question here, and I'll be glad to get out to you what you need. If it's getting appointed with American National, if it's a census form, if it's some other. Again, I have been out to American National site many times, and they do have great marketing pieces. There's some good information for agent only and a lot for consumer. So we'd be glad to get that to you. And I do appreciate your feedback on that. We appreciate your questions today. And Jonathan, thanks so much for your information and insight. We look forward to continuing to work with you, and we will, if we have any questions, I'm sure they'll ask me some questions I don't know. So I will be probably in touch with you soon. But thanks again for your time today and information.
Thank you very much for having me, Jim. And please don't hesitate. Let me know whatever I can do for you.
Sounds great. Thanks so much.
You're welcome. Have a wonderful day.
Yes, you too.